How to set up a real estate LLC. And this is something every real estate investor at some point is going to want to know how to do, because they're going to want to protect their assets, they're going to want to save on their taxes. And this is important for real estate because there's a lot of little landmines out there that you got to watch out for, and there's a lot of money to be made also, and you want to keep as much of it for yourself as possible. And there are several steps that you're going to want to follow to make sure you get this done the right way. Real estate as a practice and as an industry comes along with some inherent risks. So you definitely want to protect yourself. And an LLC can certainly provide some of that protection. And I'll walk you through how to set one up so you can benefit from the protections an LLC can provide a real estate investing business. You ready? Let's go. So I'm gonna go over the 7 steps of setting up an LLC. And at the end, if you decide you want some help, I'll go ahead and show you how to get that help, some nice, easy help without breaking the bank. So let's get started. And you start with number 1, pick a business name. Now your state may have certain rules or regulations for setting up a business name. Sounds funny, but they're out there. For example, in Texas, they don't want your name to be confused with a government agency or be confused with that of a bank or even a university. They don't want anyone thinking that you're potentially a college or something. The name must also include the words limited liability company, or LLC for short. The Secretary of State or another regulatory agency of your state will typically provide a database of names that you can search through to make sure that yours is available. If your business is going to be operating in multiple states, you're going to want to run that search in each state to make sure that you can have the same name in each state. You may also want to run a URL search, a domain name search. It's really nice for your business to have continuity amongst all the states and online. Number 2, you're going to file articles of organization. Limited liability companies are set up according to state statutes. To find out the requirements for your state, you can start by visiting the website of your Secretary of State or the other regulatory agency that might govern that in yours. Many states require filing documentation that contains information about the company, its owners, and what business are you actually in. Texas and California both require articles of organization to be filed to operate as a business, to operate as an LLC. In Texas, articles of organization may be referred to as a certificate of formation. Other states may call this documentation certificate of organization or a certificate of incorporation. This document serves as a charter with basic information such as the business name and or address and primary location of the business. You may also have to include the nature or the purpose of the business, the name and the address of the registered agent, and the names of members, managers, or owners at the time of filing your paperwork. Once you create and file your articles of organization with your state and meet the state requirements, you may be approved and registered to do business in that state. Number 3, create an operating agreement. So this is a document that basically lays out ownership, the rules for operating the company, and the rights and responsibilities of owners and managers. The agreement also outlines how conflicts will be decided and how profit and loss will be handled. Many states, such as Texas, don't even require you to file an operating agreement. California, on the other hand, absolutely requires it, kind of like they require everything. Operating agreements are very useful and highly recommended whether your state is going to require it or not, especially if you have multiple members inside of your LLC. Defining a specific method for resolving conflicts should anything go wrong, kind of like planning your divorce before you actually get married, that can be really helpful if divorce happens to come about. Even in the beginning, and it typically does in the beginning, seem like everything is hunky-dory and all the members are getting along, having this outlined in your operating agreement can really go a long way and keep the business together. Now, before I break down the final 4 steps, if you're really taking your real estate investing seriously, let me know by clicking the subscribe button, because multiple times a week I'm posting videos just like this that are going to help you save money, going to help you do more deals, and so I want you to be here so you don't miss any of that. Number 4, you need to appoint a registered agent. Most states require an LLC to appoint a registered agent to serve as the business's point of contact. Usually, this person must live or be located in the same state as the business. Usually. The agent will receive certificate of process notices, any sort of communication that comes from the Secretary of State, and other documentation, such as taxes. This is also the person that will be notified should a lawsuit come about for the company. A registered agent may also be referred to as a resident agent or statutory agent in some cases. Considering there may be a limited time frame on certain types of responses that you get based on the documentation and the communication that you receive, whoever you choose as your registered agent is a very important decision. Almost any third party can serve as your registered agent. In some cases, it could be even your spouse. And there are also many companies that offer registered agent services. My attorney, he's my registered agent as an example. Number 5. Obtain an employer identification number, an EIN. This is a 9-digit number issued by our favorite organization, the IRS, the Internal Revenue Service. The EIN is used to identify a company with employees on many important legal documents, including taxes. You can usually obtain an EIN directly from the IRS for no fee through a variety of ways, like through email, through phone, or maybe even in person. Number 6. You gotta pay the filing fees. Setting up a business in any state comes with a wide variety of fees. You can expect to pay fees to file or register your account, as well as to form your business structure of choice. Now these fees, as you probably expect, they vary depending on the structure that you're setting up. Now number 7, the final step, our favorite thing to do, pay taxes. But having been set up now under an LLC, you might hate it just a little bit less. And based on the complicated structure of taxes and the tax code, it's probably going to be a very good idea for you to consult with a certified tax professional, whether that's a tax attorney or a CPA, to make sure that you're set up the right way. Because if you make a mistake here, it can be very, very expensive. And none of us want to put out any more money towards taxes than we have to. And I say that legally, honestly, and ethically, even with Uncle Sam's blessing, because there are a number of tax advantages that apply to real estate investors that are really difficult to get anywhere else. So you don't want to miss out on any of those. And to help you out with this, I'm going to go ahead and introduce you to the person that helps me out with it, that helps my clients out with it. You see, what I've done is I've worked out an arrangement for my clients to hop on the phone for some personal one-on-one help, for a personal consultation. It's absolutely free too, by the way, to get on the phone with somebody that knows what they're talking about and brainstorm some ideas about your business specifically. And then if you like what they've got to say, if you've decided that this is a good move for you to move forward setting up an LLC, they'll just flat out, they'll do it for you. And the best part, they have removed all of the customary expenses, the big expenses that you'd expect to pay for setting up an entity like this. So what's the catch? Because there's always a catch, right? I mean, no one does anything for free. Well, the reason they're doing this for you, and the reason they're going to do this by picking up all of these expenses, is that they know if they can have the opportunity to do business with you, show you what a good job they do, how well you'll be treated, that there's a good chance that you're going to want to do business with them in the future. That's it. It's the old, let me show you how I can help you by actually helping you trick. They'll take a look at your specific situation. They're going to look at all the variables. They're going to look at all the nuances to make sure that you are structured and set up the right way, and make sure that you're set up the right way the first time. You see, when it's done correctly, you can write off up to 250 different deductions, different expenses that you can just write off, that you can deduct from your taxes. This could save you thousands and thousands of dollars just in your very, very first year. If you like the idea of this, you can get the rest of the details at freeentity.com. You can type that into your browser. I'll put a link down below in the description for you. You can go there, get the details, pick a time to hop on the phone, and talk with an expert of how you can start protecting your assets and keep more of your hard-earned money right where it belongs, in your pocket. freeentity.com. That's it for today. Thanks for watching. I'll see you next time. Take care.